This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil fell further below $85 a barrel on Tuesday, but remained close to a three-year high in choppy trade ahead of weekly U.S. supply reports expected to show a rise in crude inventories and of Thursday's OPEC Plus meeting. Analysts in a Reuters poll expect weekly U.S. crude inventory data to show a rise of 1.6 million barrels. Industry group the American Petroleum Institute releases the first of this week's two supply reports at 20:30 GMT. Brent crude was down 43 cents, or 0.5%, at $84.28 a barrel by 14:59 GMT, while U.S. West Texas Intermediate, WTI, crude fell 76 cents, or 0.9%, to $83.29.
China's coastal province of Shandong is expected to shutter refineries with daily capacity of more than 500,000 barrels by the end of 2022 to make way for a new petrochemical complex, a provincial official and industry sources said. The cleanup of 10 plants, accounting for about 3% of refining capacity in the world's largest importer of crude, is part of efforts to streamline a bloated oil refining sector that brought fuel shortages in some regions recently. Their closure, aimed at scrapping excess fuel output and curbing carbon emissions, will also dampen demand by removing 13 million tons of annual crude oil import quotas, or 260,000 barrels of oil per day, from China's quota list, sources estimated.
Moving on to the top news in the energy sector.
Russian oil and gas condensate output rose to 10.84 million barrels per day, BPD, last month from 10.72 million barrels of oil per day in September, according to Reuters calculations based on an Interfax report citing Energy Ministry data on Tuesday. Total oil and condensate production was 45.86 million tons last month, Interfax reported, versus 43.86 million tons in September, which is a day shorter. Last month's level was the highest since the 11.34 million barrels of oil per day pumped in April 2020. The OPEC Plus group of leading oil producers, which includes Russia, will hold a meeting to decide on further production policy on Thursday.
Leaders at the COP26 Global Climate Conference in Glasgow have pledged to stop deforestation by the end of the decade and slash emissions of the potent greenhouse gas methane to help slow climate change. The inability of major powers so far to agree more broadly on rapid reductions in the use of fossil fuels, the main cause of man-made global warming, has upset the poorer, smaller countries likely to suffer its worst effects. Serangal Whips Jr., president of Palau, a Pacific state of 500 low-lying islands under threat from rising sea levels, told the leaders of the G20 industrial powers in a speech, "We are drowning and our only hope is the life ring you are holding." Next, we have the top news in metal markets. Global copper smelting activity extended its recovery in October while nickel production edged higher despite sharp falls in China due to a power crunch, data from satellite surveillance showed on Tuesday. Copper smelting in China is ramping up after seasonal maintenance in the third quarter, satellite service Savan and broker Morex said in a statement. The contrasting trends between copper and nickel smelting activity in China shows how resilient, or vulnerable, each supply chain can be to exogenous shocks, said Guy Wolf, global head of analytics at Morex.
Joe Biden and Ursula von der Leyen's Green Steel Pact has important lessons for COP26. The bilateral deal struck by the US President and his European Commission counterpart on the eve of Glasgow's global climate shindig may just sound like an overdue reversal of Trump-era excesses. But it's also a decent template for decarbonizing economies. On the face of it, the agreement merely reverses Donald Trump's obstreperous 25% tariff on European Union steel imports, against which Brussels promptly retaliated. But it adds a vital green kicker. The two sides will reduce mutual tariffs, but retain them on imports from other states which fail to hit standards for low-carbon steel production. Those details are currently being fine-tuned.
We will now look at the top news in the agricultural sector.
The Chinese government has told families to keep daily necessities in stock in case of emergencies, after COVID-19 outbreaks and unusually heavy rains that caused a surge in vegetable prices raised concerns about supply shortages. The Commerce Ministry directive late on Monday stirred some concern on domestic social media that it may have been triggered by heightened tensions with Taiwan, while some said people were rushing to stock up on rice, cooking oil and salt. As soon as this news came out, all the old people near me went crazy panic buying in the supermarket, wrote one user on China's Twitter like Weibo.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.